Hello and welcome back to Camel Finance. I'm your boy Camel, and today we're going to be doing some charts because it's Sunday, ready for the week ahead. The market is, in my opinion, sending some warning signs, some warning signals, and experience tells me we need to respect these signals. So let's get into some charts and I'll show you what I mean. So the market here is telling me that something is not quite right. A bounce out of a mid-cycle low should be resuming an uptrend confidently to sort of produce this trap high and then get blasted back down, and particularly below this low here tells me that the market is giving us subtle tells to say things aren't going to plan and therefore we need to respect risk in the short term. It's important to point out that potentially we've got this inverse head and shoulders forming, so if we can get a bounce off of here and then resume an uptrend, then that's all well and good. But for now, we've had this trend line down here which we broke out, and now we've closed back below it and then taken out this prior low, so this is technically damaged. The bounce out of the half cycle low here seems invalidated in my opinion for the time being, and what we need to respect now is the possibility that if we lose these prior lows, then that opens up an enormous amount of downside for the stock market. So I'm not calling this, I'm not calling a more downside for the stock market. We could absolutely chop sideways for a bit, we could round from here and set new highs, or this could turn into some sort of nosedive event. I don't know. I'm not trying to predict anything as a technical trader. That's not my job. My job is to trade the chart in front of me. Here, this all looks very good for a bounce to new highs, but like I said, two big red candles down, taking out this prior low. This is now telling me not to be bullish in the short term, and we need to wait for a sign of repair before we can start to act again. So looking over at the Nasdaq now, it's a similar story. Again, this was relatively weaker than the S&P and the Dow, but has indeed taken out its prior low, its prior swing low, and now the risk is to the downside. If it can bounce off of here and chop sideways and recover again similarly, it's not the end of the world, and it's not time in my opinion to panic yet. But certainly if we were to lose these lows, then it does open up a whole realm of nosedive possibility. So proceeding with caution for the moment. The Dow is much the same story, of course. Do we get an inverse head and shoulders form? I don't know, maybe. For now though, proceeding with caution again. The VIX, this happened quicker than I thought it would, but we were expecting this if you watch the previous videos. Again, this is, if we get a nosedive event, then of course this is going to spike way up here. And if we don't, then perhaps we get some sort of back test before we go again. But either way, it's going up here in the not too distant future. I'm sure of that. Take a look at gold. Gold was looking really good, wasn't it? And then it's been slapped back down. I think the bond yield spiking is probably putting pressure on this. Have a look at the US 10-year yield. So yeah, this sort of is more than likely pressuring gold at the moment. And I imagine because the stock market dived, the dollar is probably bid, and it is, of course. So all of this together is going to be putting some pressure on gold. It's about time we saw some pressure on gold. But for now, we're still in. No need to really go moving stops or anything like that. I'm going to let my stop do the worrying. We got a decent entry. We're still slightly in profit, so I have no problem holding this for a while. And I think long term, again, just my opinion, but I think long term, the path of least resistance is up for gold. We have got the rate hiking cycles to pressure markets in the short term, but I do believe that the Fed is going to have to pivot fairly soon. So we will no doubt see that. I'll put a card on the top right screen now for my reasons to why. If you haven't seen that video, you can go and watch that. Silver working out really well. If you watch the previous videos, we were long here on this breakout, and then when it got slapped down and stopped out, we flipped short. And are we going to close below this? We can definitely, if we close below this trend line, we can definitely remain short because the bottom of this range becomes the target. If we can get some kind of strong bounce off of this trend line, then we'll take the profit on the short and wait to crack this box again. I think that's going to be my plan. Similar story for the miners. We had this sort of false dawn break below, and then we said, you know, we're in up until this stop, but then you can flip short on getting taken out. So now the question is, do we chop sideways again, or are we just going to get some kind of nosedive? So for now, we'll just let this play out, see how it goes. Don't need this anymore. And the junior miners tell him exactly the same story as you'd expect. And of course, I said I didn't actually end up taking this trade. This has fallen out. I've not actually been watching the silver miners because of my exposure to gold, silver, and the miners altogether. I don't need to go overexposing and taking the silver miners. But of course, if you wanted to take this trade, we have got a clear breakdown with a close below. So you would think that maybe we get a retest and resumption off, or maybe we just nosedive from here. But I've personally not been too interested with this because I've had the other two miners in gold and silver. So let's have a look at Bitcoin. Bitcoin, let's be honest, still sideways, still not a lot of anything, but showing relative strength here. That's undeniable. When you've got the stock market down, you know, these are big moves. When you've got the stock market down nearly 3% across the board, Bitcoin is really holding like a champion. This is incredibly tight range for Bitcoin as well. You can see these swings are normally much greater than this, but we've been trading for a good, couple of weeks? Yeah, 2 weeks inside of this tiny little range here. So Bitcoin showing relative strength in my opinion. But again, as I've said many times before, we're still kind of sideways. We're still in this sort of, whatever this is, this channel up here. And again, we can't really be bearish until we crack these lows, and we can't really be bullish until we're above here. So I stand by my thesis for now that we're just ranging up towards this purple box, and then we have serious decisions to make. So that's going to be it from me today. In summary, the market is giving us subtle warnings that more weakness could be to come here, or at least more chop in the short to medium term. We had our chance to have some sort of bullish breakout, and we failed that. I've readjusted this line. This will become the new line of repair for me. So until we're above this line, I cannot be bullish. But I'm also not super bearish at the moment until we take out these lows. If we can close below these lows convincingly on a daily closing basis, then I think short targets become as low as 3,600, maybe even 3,400 for the S&P. But that's for now. I'm not at all worried about this. I'm not panicking. I'm not even really bearish, because we could quite easily just turn this into a inverse head and shoulders, crack this trend line, and then go and set new highs. I don't know if we're going to do that. I don't know if we're going to make new lows. I don't know. It's not my job to know. My job is to simply trade the chart in front of me, and that's what I'll continue to do here on this channel. So if you subscribe to the channel, hit the notifications, you'll be able to watch me deal with the market in real time. Tomorrow's video is going to be showing you a lot of interesting Bitcoin charts, so make sure you come back and check those out. Some very interesting things to show you on Bitcoin tomorrow. And until next time, take care. Bye bye.